November 3rd, Thursday, market analysis with Stan Ehrlich. Hey, sorry, a little late today, had some appointments. So currently around 12:30, only half an hour until the market closes. Yesterday, we had a downside follow through from some bearish engulfings that we had on Tuesday. Now, the bearish engulfings are just a description of the way the price action moves. A higher high than the previous day, a lower low than the previous day's low, and a closing price lower than the previous day's close defines my version of a bearish engulfing. So I've turned this bar, and it was November 1st, Tuesday, like a barber shop pole with red dots on a white background, but it's not an official ER signal, which would also be a combination of a custom relative strength index overbought condition at the same time. So it's the two of them, combination of the price action and the oscillator, that create my signals. There's some nuances, there's some tricky stuff, but regardless, that's the basics. And we did see a whopping big downside follow through, even though, well, for better, for worse, after the Fed has its interest rate announcement yesterday in discussions. So it confirms that Tuesday's reversal was good by dropping like a rock for whatever reason on Wednesday. Today is Thursday. We opened lower, gapping below the low and almost the same price as the close yesterday. The low and the close were very close together. So gapping down, we did gap down. We dropped into a support area, which did not hold for very long, my red zone here, and it dropped below it. But it managed to pop back up again, and it rallied this morning enough to try and close the gap. Now, the gap would be closed with a rally up to 374.76. Our rally so far this morning has been up to 374.20. There's a 50-cent, half a point gap still. The market has been going pretty much sideways since that rally high, which was around 10 o'clock California time. So we went down slightly, came back up, but not quite a new high. And right now we are still going sideways this morning with only half an hour to go. Gaps are almost always closed. Very frequently, high percentage. So I am expecting that we will see maybe today in the next half hour, maybe tomorrow, but very soon, that gap being closed. And that means touching the low of yesterday, Wednesday, the 2nd of November. So after that, what do we got? Hey, that kills my bullish expectations. This reversal that we had on Tuesday, and I'm not expecting any more strength. I'm not expecting new highs. I was looking forward to 403 to 410, but that's now not in the cards as far as I can tell. We do have the potential of bouncing around a little bit sideways, but probably not. A bear market drops far faster, much more quickly than a bull market goes up. So now the October lows are in, October 13th. They work great. They had a heck of a good rally, albeit it was only 2 or 3 weeks. Nevertheless, it was the October lows. And things can change, obviously, but I don't see it happening at the moment. We also broke the neckline on the previous head and shoulder bottom made mostly in October this morning. Although we're back up above it again at the moment, I'm thinking that's too much damage, and the pattern has now been canceled. That's what gave me the idea that it was going to go up to 403 and maybe as much as 410. But the QQQ also just obliterated its pattern. So not much chance that it's going to work again. reserve the right to change my mind whenever I need to, and I see to, whenever I have a good reason to. I don't. So I'm now looking for probably next week the low 360s. And if the level of approximately 356, 357 cannot hold, we could see new lows for the whole trend, for the whole bear market, for the whole year, in the matter of about 2 weeks. The long-term bear market, I think, is going to bottom out around 320. I've been talking about that, and in my market letter as well, which I publish daily, a complement to this YouTube market analysis report. And it tracks my strategies, the ER Signal automated trading system. So you might be interested in that. Now, what can I say? I'm bearish. I'm looking for lower levels. And in approximately 2 weeks, I think we might see new lows for the whole damn trend. The DIA is absolutely terrible if you are bullish. It's great if you're bearish, as I am. It had 2 major bearish engulfings back to back on Tuesday and yesterday. Very unusual, doesn't happen very often. I'm fully expecting a small gap at 311.5 to be closed soon, the next few days. Maybe a bounce after that, but not much. And then a move down into the ballpark of 300 to 305, which is mostly the last vestige of support. And then we had a double bottom on the DIA, the Dow Jones, which I think is going to be broken within 2, maybe 3 weeks. It's a little bit of a distance to cover. But again, bear markets fall apart very fast, in particular, ladies and gentlemen, in the last stages of the bear market. The final push to the bottom is a capitulation, is a washout, is a fast crashing type disastrous big down day usually. So I certainly will be looking for that to declare that the market is about to turn around. And I expect it to happen. The NASDAQ QQQ doesn't have far to go before it makes a new low for the whole year. It's the one that's dropping the fastest, the quickest. This Tuesday, didn't even make a new high for it to move up. And it had already tested the neckline, which it closed below yesterday, and it closed below the neckline, plus today is totally below the neckline. That kills the pattern, the bullish head and shoulder bottom. Might as well erase these little arch marks underneath the shoulders and the head. The October low is still there. That can't be changed. That worked. But not as much strength as I was expecting from the pattern. So we're not oversold yet. That's another consideration. We are down in the 30s, but I like to see it down around 25 or lower to be officially oversold for my bullish engulfings if I get them. The ER signals, it'll be green for bottoms like it was on October 13th. But again, we've got some downside work to accomplish before we get oversold enough. All right, let's change the topic to bond futures and 10-year note futures. As rates go up, these charts go down. We have a lower low today than the last couple of weeks or so, and almost a new low for the whole trend, which means the highest rates. I see some potential beginnings of a bottom formation, but it's too soon to say, and I don't want to spend any time on that at the moment. I have to expect a test of the lows we had about 2 or 3 weeks ago, which was oversold at the time. And frankly, I think we're going to see new lows for the move down for the bond futures and the 10-year note futures. So I'm bearish there, meaning expecting higher rates. Let's look at some futures contracts. Right away, I'm immediately looking for 2 things, either a red or green bar. I'm an old vertical bar chartist, technician, market analyst, not liking candlesticks that much, but I used to teach candlesticks. I know them. They have their pluses and minuses. My charts are like vertical bars, open, high, low, close. We are overbought on the orange juice. I'll go chart by chart here, blowing it up full screen. This is the 10-year notes. We talked about it a minute ago. I expect new lows, neutral to bearish, but we had some fantastic, huge trades in the previous many months, going back a couple of years, as a matter of fact. Next chart. Got overbought on hogs, slipping off, getting close to oversold, not quite yet. Fairly neutral at this point to slightly bearish. Next, the YM, which is the Dow Jones futures contract, two significant major ER bearish signals on Tuesday and Wednesday. Right now, it's unchanged, but most of today has been lower, and I think it's going to go right back down in a day or two and make new lows. I'm bearish, period, on the stock market indexes at this point. Next chart was the E-mini, same comment, but this is a 1-minute chart, so we really can't tell too much from that at the moment. I'm going to cancel that off this workspace next time. OJ, a little overbought. I think this market's about to turn back down again, and I expect to see approximately 170 area for the next support level, and maybe it'll go flat to turn up after that. But I'm bearish at the moment, expecting maybe today to be a short-term rally high. Next, wheat, neutral. Next, corn, neutral. And next, platinum, fairly neutral. Yeah, it tested some resistance overhead, stopped, and pulled back a little bit. Nothing particularly fantastic here at the moment. You might notice that we did pick some incredibly important highs, the highs for many months before and after. And we have a couple of, one in this particular case, good market bottom buy signal. Next, gold, double bottom potential, now a triple bottom. And unfortunately, ladies and gentlemen, a triple bottom is very rare. It's going to make new lows. It's going to close below today's lows pretty soon. We had a good buy signal, lasted about a week back here on September 28th, a complimentary one a couple of days later. That worked out pretty well. We also had an excellent buy signal July 21st and a couple of really good sell signals earlier. Next chart. It is bonds. We've talked about it. I'll skip it. Cocoa, neutral. Next, silver, neutral. Crude oil, neutral to bearish. We have had a double top with ER sell signal smack on top of the second high. That was June 14th. Major top. That's what this system is built for picking major market turning points as well as minor ones. Momentarily neutral to a little bit bearish on crude oil. Nothing fancy, nothing fast, just coming off somewhat slowly. Next, high grade copper, neutral. Next, soybeans, building a big top formation, I believe. And we don't have any breakouts, but we're overbought for 3 days in a row here and starting to get out of overbought at the moment. So I'm expecting it to start to come down. We break below 1360 and we could start something very bearish pretty quick. There's not much support below that level on soybeans. Closing below 1360 could start a bear move of significance. Next, heating oil. Double top, still trying to hold. I think the risks are small. If you go short, you want to get stopped out pretty quickly if it gets stronger. I would not necessarily buy it at the moment because it's pretty close to overbought and at historical resistance. I don't have a sell signal yet, but it looks like it wants to turn back down some. Next, sugar. Sell signal on top a couple of weeks ago, came down, got oversold, bounced a little bit. I'm looking for a turnaround to go back down again. Excuse me. And natural gas, a little neutral momentarily. Soybean meal, major resistance overhead, got overbought. I expect to see a little bit lower levels short term on soybean meal. Soybean oil, definitely in the process of topping out. I would go short. I look for lower levels, and I think it's coming anytime now as far as a fast, sharp break. You might have to have a small loss for a few days. Don't get silly about these things. Always, always, always have a protective stop. I like to call it that. A stop loss is what it's historically known as when I make a trade. Never do I get into a trade without a protective stop. Coffee, still looking for lower levels, but we did get oversold. I have an arrow pointing to it, and we had a small bounce. This is a big bear move coming. We're in progress with it right now. Large topping out formation over many months. Next, rough rice. Got oversold, got another little arrow at the bottom there. Popped up substantially. Now overbought. I expect it to turn back down again. Oats, neutral. Cattle, a little bit bearish. And 10-year notes we looked at already. Let's go to some sector stuff. This is brand new. I only started talking about it a couple of days ago. I'm going to go to the top of the list here. And KBE. We had a bearish engulfing, but not overbought. Damn close. Not quite. It's working. If I didn't have such a strict overbought number, then this probably would have been an okay sell signal. Next symbol was SMH, and the same reasons here. Now, I got the bottom of the market. We turned green on the low day. That's exactly what I love to see. And it was a very nice rally for about a month, a little less than a month, 2.5, 3 weeks. Right now, fairly neutral. But we did get an outside down day a couple of days ago. Bullish engulfing at the bottom, again, about 3 weeks ago. We had an outside down day on Tuesday, started this big break yesterday, and we have gapped down further today. That would be XLK. XLU, the utilities, has a bearish engulfing yesterday, a little bounce back today. And remember, when you have these bullish or bearish engulfings, there is a strong tendency for the market to come back into approximately the middle of the range of the engulfing day. And that's exactly where the high is today, around the middle of yesterday. Now, it hasn't started to break a lot, but it's not at the high at the moment, and I'm looking for lower levels. Next would be the XLY, same commentary, bearish engulfing Tuesday, dropped like a rock on Wednesday, and is a little lower today, testing the lows of the whole trend. And the lows of the whole trend was another green bullish engulfing. Let's go to brand new signals. Outside down day 2 days ago was almost overbought, not quite. Next, that was the XLF. Now I'm showing you XLP, and yesterday was an official ER sell signal, bearish engulfing, overbought conditions, turn the price action red. This ER signal strategy is available for TradeStation, and we're working on translating it into NinjaTrader, and I will be using in the future NinjaTrader charts also. It's working just fine, as you can see, at this point and for many months on TradeStation charts. So the next chart is XLP, bearish engulfing Tuesday, same story. And the next few symbols, you're going to see the same thing. Bearish engulfings. Next one, XLV is in Victor. Yesterday, whopping bearish engulfing, covering at least 2 previous days, and a big down day today, coming back a little bit at the moment. Next, we've got the XLV, same story, bearish engulfing. This is the start of a big move down. This is why, or one of the reasons why I'm expecting to see the stock market overall come down as well. By the way, we're getting close to the close and we're down 320 at the moment on a spider slipping, not closing that gap yet. And next chart, XOP, same story, bearish engulfing, a little more strength than I'd like, but yesterday was a good sell signal. I think it's a low risk short sale here. And XTL is a huge bearish engulfing yesterday and gapping down low and last at the moment, looking for lower levels. There's gaps to close at lower levels as well. That's the telecom. Lastly, XLI is an indigo in the industrial spider, bearish engulfing, gap down, low and last, same story, hitting the dust. Lastly, I'm going to talk about forex. My system picked the low move in the euro dollar period, September 28th. Bullish engulfing, oversold. We had a bearish engulfing yesterday. It looks like the euro dollar is now going to test or make new lows for this long-term bear trend. You know, a few years ago, this was up at 120 or maybe 130, something like that. Much, much, much higher. Where was it? 122. Not quite as, 122, approximately. So this has come down in the last couple of years quite a bit. And I think it was even higher than that earlier. I'm not sure about that. We also got short because of a bearish engulfing ER sell signal on the DX index at the same time. Thanks very much. Have a great trading day. Sorry, I'm looking for lower levels in the indexes. Hedge up, get short. Have a good day. Talk to you tomorrow. Signing off.